In this video, we're going to be talking about a Vanguard fund for high growth, in particular the Global Small Cap Index Fund. This is because historically studies have shown that small cap funds have been shown to outperform mid and large cap funds, meaning that if we're able to invest our money, we could potentially see a larger return on our investment, which is of course what everybody wants at the end of the day. In this video, we'll be covering what a small cap fund is, why historically they have done so well, and most importantly, we'll be covering step by step through the Vanguard fund specifically, which I personally invest in, and one that I think is extremely good for targeting specifically small cap companies. Full disclaimer, I'm not a financial advisor, so nothing in this video is financial investment advice. This video is purely for entertainment and educational purposes only. If you're new to the channel and you'd like to see more videos about investing, finance and crypto, then make sure you subscribe. And with that said, let's get started. So let's just start off by actually defining exactly what market cap means. And market cap is short for the term market capitalization. Essentially, this is a way of actually describing typically the relative size of a company. And the way that a market cap of a company is actually defined, it's really simple. It's like a little formula that you use. So you would just typically get the share price of a company. So let's say there's company A, their share price is £100. And you take that £100 and times it by the number of outstanding shares. So if that company has, let's say, 100 outstanding shares, then if you were to do 100 times 100, that will give you the market cap of £10,000. Now, just to give you an idea, small cap companies in the world of investing are said to be companies that have a market cap between 300 million up to 2 billion. Mid-cap companies have a market cap of 2 billion up to 10 billion, and large cap companies have a value of 10 billion and upwards. Simply, a small cap fund is something that allows us to invest not just in one small cap company, but instead in lots of different small cap companies. That way, if there was ever something that was to happen bad to one company, it wouldn't matter that much because we have all the other companies in that fund to make up for it. So it's a way to diversify our risk, and that is seen as a good thing in many instances because you're less prone to being wiped out by one specific stock. Now, just quickly, I want to explain really why I love small cap funds and why this potentially is so good for bringing back returns. And that simply comes down to the concept of growth. Smaller companies do have potentially a much larger room to grow, and this example should hopefully demonstrate that really easily. Let's just say that you have a company worth £10 billion. So that company, in order to 10x in value, would need to get all the way up to 100 billion. And that is actually going to be a great task, because to generate 90 billion worth of extra value is not something typically that we see happen overnight. On the other hand, if you have a small cap company that is, let's say, valued at just £1 billion, then for that company to 10x, it would only need to get to £10 billion. And that's just an increase of $9 billion. So you can see there that smaller cap companies have the room to actually grow at potentially a much better rate. And because of that, that is why they have seen to be as fair as possible. Because of that, we also do see the reverse happen. So whenever there are actual corrections in the market, typically we will see that actual small cap companies, just as much as they can go up quite well, they would also go down at the same rate as well. So that's something to bear in mind. Small cap companies are seen to be a bit more volatile in the short term, but over the long term, having all those small cap companies growing is something that can deliver some really, really nice results. Another reason why people tend to think that large cap companies are a bit safer as well, by the way, is simply because with large cap companies, their product offerings are normally very much stabilized in the market. People know who they are, what they're about, and they can deliver something again and again on a consistent basis, very much likely without little competition. These smaller companies very much have high competition. They might be trialing new technologies which may not actually work, or markets that they try to enter into might actually not accept them in the space that they're in. So these are all things to kind of bear in mind. But again, if we have a lot of these small cap companies, then overall these companies should hopefully do well over the course of a long time, and ones that don't do that well, they'll just simply be pushed out of the fund. If you're new on the idea of diversification and how funds actually work, then you definitely want to check out this video up here, because I talk a lot more in detail about specifically what funds are and also why the concept of diversification is so helpful to investors. So now for the juicy part that you've all been waiting for, we're going to look specifically into Vanguard's fund. And Vanguard's Global Small Cap Index Fund Accumulation is the specific one that we will actually be going into a lot of detail. We're just going to break the fund up step by step so you can see exactly what's included in the fund, why is this fund actually so successful, and what has it done in the past. Just to actually bear in mind here, all the results that you see from this fund are from historical data. Just because the funds have done well in the past does not necessarily mean that it would do well in the future. You'll always see disclaimers when you're going through funds that past performance is not an indicator of future performance. And that's true because nobody actually knows what's going to happen in the future. And that's just part of the game of investing. You are investing hoping that you're able to profit long term, but anything can happen, so it's just something that you have to get used to. All right, so the first thing that we can see is that this is a global fund. So this means that actually everything in this fund is going to be based on an international level. Actually, in particular, it's comprised of small-sized company stocks in developed markets. So this means that you'll only find companies in this fund that are in areas of the developed world. One of the reasons for that is because if you have companies in emerging markets, that does add an element of risk into the fund, because often we see in less developed countries, there are a lot of things like political instability and just unrest in countries that really can have a negative impact on a company's performance. And that's not something that this fund, of course, wants to actually bring in. So it just focuses on developed markets. And just to kind of mention here, it's accumulation. So all of the profits that we get back from the dividends of this fund are reinvested into the company, and that will just add on to the compound growth. And of course, that is a really key concept. If you've never heard about compound growth, I recommend this video up here. And it's really helpful just to get a better understanding of how your investments over the long term, when compounded, can grow into significant portions. Now, a key thing about this fund, we can clearly see here that it holds 4,328 stocks. Fantastic, lots of stocks just means it gives that extra element of diversification. We can see that if a couple of stocks do really, really bad, it's just not going to matter that much. And here we have an ongoing charges fee. This is just basically the fee that you are charged for having your money in this fund, you know, for the fund to actually run and for Vanguard to actually make a profit. One of the key reasons why I absolutely love Vanguard is simply because their fees are extremely low. I mean, this 0.29%, it is pretty good. You see a lot of funds that have traditionally a lot higher rates than this, so we're really happy with that. The reason why having low fees can potentially be very good is because when you are making your profits, that profit would be going into your pocket as opposed to the fund managers themselves. So, you know, more for us, great. And these fund managers. The last bit here that we see on the front page is the risk factor of 6. And simply what this means is that actually this is seen as quite a high risk investment. And, you know, that might seem scary originally, but one of the things that you have to realize with high risk investments is that if they are higher risk, then that also does mean the potential for higher returns as well. High risk simply means that the price can be going up and down at a very fast rate. So it's something that typically investors are advised to actually hold for the long term, because short-term fluctuations can actually seem dramatic, but when you have it for a long period of time, you will start to notice, as I'll pull up in a moment, the graphs here, that it doesn't really matter that much, because typically over the long term, these actual small cap funds do grow very, very nicely. And just to add on here, the price of this current fund at the moment is just £373.47. So that essentially means that if you were to get 1 unit of this fund, then it would cost you just that. Now, as that price goes up, this is where you make your profits. So the hope is to, of course, buy it while it's low and sell it, of course, when it's much higher. That's where the money is actually made. And here we can see the performance of the actual fund itself over the space of the last 10 plus years. So if we're to look, if you were to have invested a lump sum on January of 2010 of £10,000, actually at this current moment in time, so as of January 31st of 2020, that would be £37,695.33. So as we can see, a nice steady rate of growth. And even though there are dips here when you have certain corrections in the market, for example, this was of March last year, you know, the market just tends to do its thing and continually go up anyway. So this is really nice because, you know, it's just seen as a nice stable way to kind of have your money grow over the long term, and who doesn't want that at the end of the day? Just to point out, I mean, we can see here on a year by year basis the returns actually brought back to us by this fund, and it's really good to kind of have a look at this because as we can see, some years the fund has had minus numbers on actually just 2 occasions. And if you were to have first invested your money when the fund did have a bad year, it's kind of good to have an understanding that this does happen with investments. But over the long term, you can see we've had plus 12% in that year to kind of make up for that year, plus 29%, which is great, 8%, 5%, 34%, 11%. You can see more often than not, the fund has had a really, really good performance. Interestingly enough as well, this fund, because it's global, does touch pretty much most corners of the earth. And we already know that it focuses on developed markets. So we can see here that 62.2% of the fund actual holdings do exist in North America. We have 20% in Europe, 16% in the Pacific, and nearly 1% in the Middle East as well. So key thing just to kind of note out there. And then most importantly, it's also varied across different sectors of the economy. So we've got like industrials, IT, healthcare, financial, real estate. So indirectly, this is a way for us also to have access to those different markets as opposed to, let's say, being 100% in on one area, like, you know, healthcare, and let's say healthcare has like a really, really bad season, we're not going to be affected by that as much because we've also got real estate and financials and all these different areas to make up for it. By the way, if you're ever curious, you can always find out the exact companies that are in this fund just by going to the bottom of this page. It has the holding details and you will see all the names of these companies here. I mean, I'll be honest, there are so many companies in this fund, I don't think anybody would potentially have the time to kind of deep dive into 4,307 stocks, except, you know, the company themselves who have selected these. But if you were curious, then this is exactly how you would do it. And lastly, there's a little section on the Vanguard website that just shows you exactly how competitive Vanguard's fees are. So you can see here that just by investing £10,000 in this fund, as opposed to the average of a normal fund of this nature, you would potentially have saved £1,386 on the actual funds itself. Also, by the way, if you ever want to find out a little bit more information about the fund that you're investing in, I always recommend, and these companies, they always recommend that you should read the key information document. You can find it really simply down here, and it's always worth just having a quick read through. So these are my thoughts on the Vanguard Global Small Cap Index Fund, and really a key summary here is that actually this just makes up a small portion of my overall investment portfolio. I personally do believe in diversifying across different asset classes in different industries of different types, just really because of that concept of diversification. And with that being said, it's something that I'm really happy to just kind of hold and invest for the long term, because at the moment I'm young and, you know, over the next 20, 30, 40 years, it's something that I'm just happy to be able to kind of ride those volatility waves. So when the price does go down by quite a lot, then it's something that I'm just going to be able to just sit calm through, kind of let it do a thing and just continue to rise hopefully over time as well, as the markets typically tend to do. So with that being said, if you really like this video, do go ahead and give me a thumbs up and subscribe if you haven't already. If you'd love to see more videos on investing, stock market, cryptocurrencies, and really just how to maximize your money in general. That's it for the end of the day, and there are going to be 2 videos here on the screen which will show you more about investing and the stock market or how to maximize your money. So that's it from me, guys. I will see you in the next one. Take care.